Let me say something most landlords don't want to hear. Bad tenants are rarely bad luck. They're usually the result of bad screening, weak systems, or emotional decision making. And here's a bigger question nobody talks about. If you keep attracting tenant problems, is it because you shouldn't be self-managing? Today we're going to break this down clearly. When you should self-manage, when you absolutely should not, what property managers actually do, and how to avoid tenant nightmares either way, because one eviction can wipe out your profit for an entire year. So let's get into it. Welcome to Real Estate Simplified. I'm Bill Simmons. I've been investing in real estate since the 80s. Flips, rentals, multi-units, 30 plus years before I became a realtor. So I've learned a few things about the investor side. I've been around rental property long enough to tell you this. Most tenant disasters don't start with the tenant. They start with the landlord cutting corners. Here's what that looks like. You skip full screening because they seem nice. You accept partial deposits because you don't want to lose them. You ignore credit because they had a rough patch. You rush placement because the property's been vacant 2 weeks and you're getting nervous. That's how tenant nightmares begin. Bad tenants don't show up screaming. They show up polite, then late, then defensive, then gone. If you're self-managing, your screening process must be unemotional and consistent every single time. No exceptions. A lot of people think self-managing means collect rent and call a plumber when something leaks. That's not management. Real management means marketing the property correctly, showing it, screening properly, verifying income, running credit, checking landlord history, writing enforceable leases, understanding fair housing laws, handling maintenance requests, enforcing late fees, posting notices properly, knowing eviction timelines, keeping detailed records. If that list stresses you out, you may not want to self-manage it. And that's okay. But don't pretend it's passive income. Self-managing is a part-time job. Now let's be fair. Self-managing can be a smart move if you have 1 to 3 properties, you live close to them, you have reliable contractors, you're organized, you're not conflict avoidant, and you're willing to enforce rules. The biggest benefit, you control tenant quality, and tenant quality determines profit. A good tenant protects your investment. A bad tenant destroys your margins. If you're detail-oriented and disciplined, self-managing can absolutely work, but only if you treat it like a business. Now here's the uncomfortable truth. You should not self-manage if you hate confrontation, you struggle enforcing boundaries, you travel frequently, you own properties far away, you get emotionally attached to tenants, you don't understand landlord-tenant law. Because here's what happens. You let late rent slide once, then twice, then 3 times. Now you're financing someone else's housing, and you're the one stressed. Landlording is about systems, not sympathy. You can be kind, but you can't be soft. Now let's talk about property managers. A good property manager should market aggressively, screen aggressively, enforce lease terms, coordinate repairs, handle 2 a.m. phone calls, process evictions, keep financial records, protect you legally. They typically charge 8 to 12% of monthly rent plus placement fees, sometimes maintenance markups. So the question becomes, is that fee worth it? If they prevent one eviction? Yes. If they place higher quality tenants? Yes. If they reduce your stress? Probably yes. But here's the key word, good property manager, because a bad one is worse than self-managing badly. Let's do the math. One bad tenant can cost 3 months unpaid rent, $3,000 to $8,000 in property damage, court costs, lost time, lost sleep, vacancy, releasing fees. That can easily hit 10,000 plus. Now ask yourself, would you pay 10% monthly to avoid that risk? Suddenly the management fee doesn't look so bad. But here's the twist. Many bad tenant stories happen under property managers too. Why? Because screening standards were weak. So whether you self-manage or hire it out, tenant quality is still the foundation. This is the part most landlords skip. Here's how to avoid nightmares. Number 1, written screening criteria. Before you list the property, write down minimum credit score, income requirements, 2.5 to 3 times rent, no prior evictions, no violent criminal history, verifiable employment, and apply it equally to everyone, no exceptions. Number 2, verify income yourself. Don't just accept pay stubs. Call employers. Cross-check bank deposits. Fraud is more common than people realize. Number 3, call previous landlords, not the current. Current landlords may lie to get rid of a bad tenant. I've had it happen. As for landlord history going back 2 rentals, require full deposits, no payment plans, no partials. If they can't afford the deposit, they can't afford the rent. Use strong leases. Generic online leases get landlords in trouble. Your lease should clearly define late fees, maintenance responsibilities, entry rights, termination rules. Clarity prevents conflict. Here's something interesting. Good tenants screen you too. They ask smart questions. They care about the condition. They respect timelines. Bad tenants rush. They pressure you. They overshare hardship stories early. They negotiate everything. Your job isn't to rescue people. It's to protect the asset. When you shift from emotional decision-making to policy-based decision-making, everything changes. Here's something most investors don't consider. You can self-manage placement and hire management after move-in, or hire management only for leasing, or hire them only for eviction handling. It doesn't have to be all or nothing. Sometimes the smartest move is you control screening, they handle operations. That gives you tenant quality control without daily stress. The honest question you need to ask yourself, here it is. Do you want another job? Or do you want an investment? If you enjoy operations, self-manage. If you want scale, freedom, and distance, hire help. There's no ego in this decision. The only thing that matters is, are your properties producing predictable profit? Tenant nightmares aren't random. They're predictable. They follow weak systems. Whether you self-manage or hire a property manager, the real decision is this. Are you running your rental like a business? Or are you winging it? Because rental property done right builds wealth. Done wrong, it builds stress. Choose wisely. If you're looking at a property in the Omaha or Southwest Iowa area and want a second set of eyes on rehab numbers before you make an offer, I'm happy to walk through it with you. No pressure. Just practical advice based on decades of seeing what goes wrong and what works. And if this kind of breakdown helps you think more clearly about investing, subscribe. I focus on protecting your money, not selling you the hype. I'll see you in the next video.